So there is a lot of reason to guess and to forecast that the next 2 years we are talking about a very powerful adoption, very powerful growth, appreciation of the price and cryptos. If it's gonna be 2x, 5x, no one knows. However, based on the facts again, halving historically has always brought powerful rallies.
This content is brought to you by Uphold, which is a great crypto platform that I've been using since 2018. Uphold has all the top cryptocurrencies, Bitcoin and all the altcoins. In fact, they have 260 plus cryptocurrencies on their platform. You can also trade precious metals, stablecoins, and 37 fiat currencies. In addition, they are available in over 150 countries. And this platform is fully reserved. They do audits, so you can trust that your funds are safe, no commingling, no lending out your funds. If you'd like to learn more about Uphold, please visit the link in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Adrian Zduńczyk, who is a chartered market technician and the founder and CEO of the BIRB. Adrian, great to have you on.
Oh man, thanks Tony. Thanks for getting this quick intro. It's been a while since we got for the first time, together on Twitter, and it's finally good to see you, my friend. You're looking as handsome as always.
I was actually expecting you to be maybe in your first class cabin, but it looks like you're traveling somewhere else right now.
Yeah, it happens. Last minute issues at times pop up. Still, I couldn't just kind of like keep you hanging and just cancel or so. So I'd love to share a little bit of some insights that some traders might be finding interesting. Although for a daily basis, surprise to what may be surprising to many other people, I just lose money for living, right? When someone asks me what I do for a living, I say I lose money for living because I'm wrong so often, and that's my nature. Yet still, somehow I'm finding a way to be profitable. So uh, this is a little bit of a controversy, right? I'm not gonna give any. I'm not gonna sell any dreams. I'm not gonna give any probably surprising stories. Most of that is boring, so I'll just ramble you through it.
Yeah, well, it's great to have you on, man. I've been following your work for a while, and I appreciate all the charts and the alerts and things you've been putting out. It's great content. I've learned a lot from you. So I figured I got to get you on the podcast because you know a lot about the markets and what's going on. But let's start with your background. Where are you from, and how'd you become a trader?
Good question, Tony. So I'm Polish. I'm from Poland. Currently based in Portugal. There's Dubai for the enterprise, for the other businesses and ventures that I do as well. So there's this Bermuda Triangle that I'm in. I never know where I'm gonna be, next month or the next weeks. And I'm like this free electron. You have this probability to find me somewhere in between those countries most of the time. So that's about my roots, if you will, or the positioning geopolitically or geographically. Sorry. So otherwise, the trading career, and again, I think it's been fairly typical. It's been fairly typical for most of the part, as in, I got many things right, I got many things wrong. Win a lot of money, lose a lot of money. Still, what I'm finding it over the years, as I'm doing this, for the 7 year already, 7 year counting, is for the trading and for crypto, it's so much more important than winning and being right. It's actually making money, right? And those are two different things. And there's even a whole book, such a great book dedicated upon this title, being right or making money. Those are literally two different things. And as traders, as investors, we always have to kind of like choose our path, right? Whether we want to be right or we want to make money. If we want to be right, we are not going to make a lot of money. If we want to make money, we're not going to be right often, right? So that's the very nature. There is no in between, because in between is 50-50, right? And 50-50 doesn't really give you much of the edge, much of the statistical winning chances. So the story is full of ups and downs, falls and rises. It starts, early. I think, my grandfather used to hold Bitcoin in 2012, 2013 for football matches betting. He was a day trader. It was, he's a very wise man, even though I didn't really understand, what he was doing at that time when I was like 20 years younger or 10 years younger. He was doing the day trading, right? He was sitting in front of the computer screening the charts black and white, with the ticks moving. And at that time, I couldn't really understand. So there was something always, around regarding trading that I hadn't found really a way to pull the trigger on until 2017, when I finally graduated, with my master's of engineering degree diploma, and had enough time to, to compensate for my interests elsewhere, right? Otherwise, plenty of engineering friends, programmers, coders, would always have this crypto kind of like words and bass summer passing by at the parties, especially with the crashes. There was the Mt. Gox collapse, 2014. So a couple of those, phrases came up several times in when I circle back to to those years. Although I was busy making the main goal of the studying in that time, and which is what I did, right? So only when I entered 2017 crypto for good, and I had enough time to pull the trigger and to fully just practice and sit it down to it, I truly found, it can be inspiring, can be interesting, could also be a deadly weapon, like a double-edged sword. Like I said, and eventually it takes years to find the way to the profitability, which is probably the most important from a trader's point of view.
Oh yeah, for sure. Were there any books that you read that you would recommend to other people looking to become traders?
So plenty of those, man.
Mm.
So many of those. Let's start with John Murphy, technical analysis of the financial markets, right? John Murphy was one of the, I'd say, pioneers for putting the things simply, right? And he was also very entertaining in his books, so I really enjoyed reading this one, as well as the intermarket technical studies, right? Intermarket technical analysis. There were 2 chapters, 2 books just on this topic, as he, again, sort of like pioneered and then laid out the concept of relative strength and comparative strength rather than absolute strength, right? So instead of observing the prices, we would observe the price ratios of one security over another, of Bitcoin against Ethereum. And our job is to maximize the utilities, to maximize in terms of the profits, the returns, the gains, by selecting the outperformers, right? So we want to hold on to the winners rather than to the losers. If something continuously outperforms, this should get a bigger portfolio attribution side to, within our assets. And what continuously underperforms, which is weaker relatively, this one shouldn't get too much attention for our, money spent on that. So those, John Murphy really did well on that. Steve Nissen, of course, with the Japanese candlesticks, a lot of candlestick patterns. There are thousands of patterns, very difficult to spot and differentiate some of them. And some of them may have predictive power, right? The others not necessarily, are sort of like random. So again, it's about finding the combination and the edge of, between the indicators that you use and the ones that are actually backtested, proven, reliable, and have some common sense embedded in them, right? Because if we use 50 different indicators at the same time, we're going to have a lot of success, right? At times, it's so much better to have one reliable tested indicator and rely on that rather than trying to force and be right, because this is our internal desire to be right, no matter the cost, no matter what. All right, so that's second, Steve Nissen. I think the Richard Wyckoff obviously was a pioneer himself, like very, very long time ago. If I'm not mistaken, it might have been in the 30s or 40s. Like he was a proper pioneer of technical analysis at that time. In the era where no computers were available. Technical analysis also have grown to become a very much more of a reliable field of study between the economics, statistics, maths, the behavioral finance, if you will, explaining why we behave the way we do, even though it's irrational most of the time.
Right.
So the whole CMT curriculum is based on those best chapters, those best snippets out of the whole technical analysis documented history, reaching as early as 215 years ago. And for those who actually may not be familiar with it, technical analysis, momentum investing that underlies technical analysis, is the most and the oldest documented investment strategy, basically. Right?
wow.
So it's not Benjamin Graham, it's not Warren Buffett, it's not fundamental investing, it's not cash flows, this kind of cash flows, DCF, and so on. It's actually momentum investing and technical analysis, even though it wasn't called this that time. So 215 years or so and counting.
Wow. That's incredible. I appreciate you sharing those books. I'll have to check some of those out. So let's talk about Bitcoin. Bitcoin, of course, rallying a little bit of a pullback right now. What is your short-term expectation for Bitcoin? Some are saying this is a rally to 48 to 50K. Are you on that boat?
Good question. So I'm a trend follower. So I follow the trends. And like I said, making money or being right are two different things, right? As I basically, just differentiate between the expectations between guessing and forecasts and trading. Those are two different things. I may bet and expect things to go to the upside, and I may have the opposing position, for instance, right? So one is not always inclusive for another. And speaking of the forecast and expectations, again, it's a roll of dice. We don't know the future. There's no way to predict the future, right? You can only guess and make some educated guesses based on the history and based on certain indicators. Some of them, like momentum indicators, such as RSI, relative strength index, or a simple rate of change. When the trend is slowing, you're gonna see a rate of change falling, right? When the trend is slowing, you're gonna see RSI trading against the main trend, just falling again. So this has a little bit of this predictive power and may inform impending, reversals at times. So as a trend follower, I follow the trend. I will never oppose this, right? Trend is moving up. The main dominant tendency of the market, represented by the 200-day moving average, has been moving up since March. Even more sophisticated custom proprietary indicators that are more sensitive, were aligning to the upside since mid-January, when there was a breakout over $20,000. So all that things concerned, we've been in a proper bull market ever since January/March this year. And that thing cannot be denied. It cannot be refuted, because it's not my opinion. It's the chart. It's the numbers. It's the facts. It's the percentage. So before Bitcoin slightly retraced right now, 10% or so from the peak, it moved 190% up over the year to date for 11, 12 months straight. Okay. This is the persistence. The trend, by definition, is a persistence price movement that, again, is a price movement that tends to persist. It is directional. It has direction. It doesn't chop around. It moves and consistently in one direction. And that's the case. And when we don't want to, get confused with too many time frames, we just can play the daily chart and 200-day moving average overlay, and we can turn off the bar chart. We can turn off the candlesticks. We don't need them. They are noisy. All we need is a trend, and the trend has been pointing to the upside. And that cannot be refuted, that cannot be denied, because it's something that has happened. And facts, by the statistical nature, cannot be undermined. They always have 100% probability rate. So we're talking about facts. We're talking about a lot of persistent movement to the upside, and those trends tend to persist. And some of them last for weeks, for months, even for years. And some corrections on the way are regular, are normal, are expected. And it's hard to predict anything, for a day ahead, not to mention 5 years ahead. So even though there is a little bit of a chop, a little bit of a retracement, again, I can roll a dice and try to make a guess. I might be wrong easily, like I am always. So probably, after that powerful slash swipe that we had to the downside, it kind of like stirs and clears the liquidity at the bottom, right? It removes the clustering orders, removes those resting orders. Some of them are activated. The other traders got stopped, And what it does, it clears the market, right? Just kind of like you played a poker. This gives you a new rendition of a card set, right? It kind of like just splits and reshuffles everything. So some of the orders were eliminated. So it's just kind of like a fresh air pocket, if you will. Some of the orders have restrained and kind of like came back. Other ones, are missing. So there's bigger probability that if we hit those lows, we may just play around along those levels. So we may just chop around, maybe hit 40, maybe hit 39, 500s. However, the trend is to the upside. So by definition, if we know that this trend is to the upside and it persists, the chances are that those are only secondary and tertiary corrections that are completely irrelevant from the long-term perspective. So they give you a good opportunity for buying most of the time, right?
Yeah. And do you think we still have another leg up, maybe in December, or it comes in January? There's a lot of hype around the Bitcoin spot ETF approvals in the United States. What are your thoughts here? We stop out of maybe 52, or we go a little bit higher. Some people are projecting all-time highs, going into the halving. What do you think about that?
Good question. So, see, it's a perfect question, Tony. What I would say is that it's difficult to comment on, let's say, on opinions, right? Because opinions by definition are quite often different than the facts because they undergo certain emotional processes. When someone is exposed to crypto, I'm out of the market right now, by the way, I got stopped. If someone is heavily over invested, they're gonna search only for confirmatory evidence and search for, ignore 99 different problems that they see in the market and just focus on one that is actually speaking in their behalf, right, or speaking in their favors. So I'd love to, as much as I love to comment on the opinions, I would suggest that we focus on the facts. And again, facts are also relying on the seasonal study. So just like weather has seasons, and the temperatures have seasons for being higher and lower at certain periods of time in the year, prices do the same. Prices have also seasons. And the markets have the months when they perform better and the months when they perform worse, such as Bitcoin is the only, shows the only negative gain out of the entire year in September. And September proposes 6.5% negative gain and loss as the only month, right? August is somewhere as the weakest one behind that, floating somewhere around the break even. However, with those strong seasonal patterns, persisting over the decades that my good friend Jeff Hirsch and his old late father, Yale Hirsch, constructed this framework for analyzing the market seasonally 70 years ago or so. We put together this first ever Bitcoin seasonality article, right, for institutions, because when I talk to the hedge funds, when I advise, to the institutions, to the banking sector, they don't care about my opinion. And why should they, right? They should care about the numbers. So we proposed this article, gathered all the most important data factors, statistics, and give them that on a silver plate. And they have no way to refute this, right? Even though still they have a lot of institutional bias, as I call that, right? It's filled with a lot of conservatives. They don't like Bitcoin because it doesn't fit in something that they already know. They try to put Bitcoin in the discounted cash flows models, and Bitcoin is decentralized. It doesn't have a company. It doesn't have cash flows, right? In the traditional sense. So they arrive at the conclusion that Bitcoin is worthless. And it's completely off and it's completely wrong because they try to account for the new information, for this new form of investment vehicle that Bitcoin is, and put it into something that they already know from the outdated to the outdated frames. And this is a bias. This is a mistake. This is an information processing mistake. So even the biggest funds in the world suffer from the simplest biases that an 80-year-old, coin flipper has. And if we flip a coin 10 times in a row and we win tail, and heads and comes up all the time, it doesn't make us the best coin flippers in history. We just got lucky. Okay. And that, considering, the luck and mistaking luck for skill is probably the deadliest of the mistakes that we can ever make as traders. And knowing for the seasonals, again, I'm commenting on a fact. And there is a factual January barometer seasonal pattern invented and discovered by Yale Hirsch and Jeff Hirsch, right? They are the people who invented that, and they are the people who base it on the 70 years of data, right, or so. And the January barometer says that over the years, over those decades of the history, 80% of the time, as January goes, so goes the year. If the January closes positive, the year has 80% probability to close positive, which was the case in the last year midterm bear market, which was the case this year again, We're closing almost 180% higher as of now than we opened. This is a powerful performance. So relying on those facts, on those factual data, evidence, proof, we are giving ourselves a better chance for profitability rather than relying on opinions. So February is a weak link between strong months, right? We've got the best. Bitcoin is trading like a Nasdaq, more beta volatile version of a Nasdaq stock.
Sure.
And Nasdaq follows the pattern of the best 8 months. And this is a seasonal strategy, again, proposed by Yale and Jeff Hirsch, my good friends. Yale is a late father. He committed so much to the investment scene that it's incredible. The first paper that I released over 70 years ago, it changed the market. The whole market just shifted literally because the whole market, the banking sector, the investment institutions, they started paying attention to the papers that are released because there was no other framework, right? And the whole market shifted based on the papers that are released, right? So this is how powerful it can be, knowing this data. And February is the weak link between the strong months within the best 8 month strategy. You typically want to avoid, such as for S&P 500, it's weak 6 months, or 6 months versus best 6 months, as November typically reverts down all the way until sell and make go away pattern, if you will. It doesn't extend with strength into the Q3 that is typically slow, and people take time off and they don't trade, right? When people take time off, don't trade, there's less support cushion, less interest engagement that they may commit. So all those things concerned, April is the halving month. The ETFs may be there. It may be a little bit of a buy the rumor, sell the news type of a behavior. Sure. However, on its own, fundamentally, it's so much of a boost, for the global adoption, because we're talking trillions of dollars potentially stepping in crypto, and they have unlocked the doors, right? The regulations are here. There's no other excuse anymore. The regulations are here. They are knocking on the doors. They are entering. The spot ETFs are there. It's legal and it's open and it's ready to accept and absorb a lot of capital. And with that, there's a price appreciation in line.
For sure. And with the 4-year cycles that we've seen historically, it looks like 2025 is when we may see a new all-time high, or maybe the peak of the market, I should say. Are you looking at that time range as well, that 2020, maybe middle of 2025?
Yeah, so see, very good point, Tony, right? So 4-year presidential stock market cycle is what Bitcoin follows closely because, like I said, the correlation coefficient, as in covariance of how Bitcoin covaries with S&P 500 or with Nasdaq against their product of standard deviations, it corresponds with the volatility and how the volatility pairs between those assets in a similar fashion. And Bitcoin has increased in terms of the correlation coefficient by more than 400% over the long-term basis directionally, on the how strongly it attaches and relates to the Nasdaq, and it relates more strongly to Nasdaq than to S&P 500. So now S&P 500 has the 6 months best and 6 months worst strategy, right? So half of the year is strong, half of the year is weak. For the Nasdaq, which is more aggressive, more beta volatile, and more like Bitcoin, actually Bitcoin more like beta version, more volatile beta version of the Nasdaq. It follows the best 8 months and the worst 4 months, right? So you only have a 4-month window when this performs poorly or flat, floating flat, versus the positive growth and gain of for the rest of the months since November through, let's say, June, July. And 2024 is an election year. And election years since 1949, so 74 years of data. Again, this is 3 times as I live, almost 3 times as I live, right? As much as I live. There is a very interesting statistic where the running president, when the current president is running for re-election, the markets react the best to it historically in terms of the S&P 500, returning 12.8%, right? Which is better than about 3-4 percentage points of the average aggregated return over the year of the S&P 500. That tells us that there is this good condition for a rally extension in 2024, out of the pre-election year, right? So another funny statistic is about the pre-election year that ever since the Second World War, 84 years, there was only one losing pre-election year, only one in 84 years. Anything else was, any other case out of the 20 pre-election years were bullish. So that rounds up to either 95 or 98% of the probability on betting positive on 2023 that I was very vocal about for the whole year, right? So this is the power of relying on facts and data. And 2024 is an election year that, again, is setting up for a good performance, outperformers versus the typical average return of the S&P 500 between 8 and 10%. It averages 12.8. So it is quite an outperformance, over 20% of outperformance, if you will, to compare. And that translates to even more confluence alignment. We've got the ETFs, like you mentioned, Tony. We've got the BlackRock and Larry Fink speaking of Bitcoin as the flight to quality. We've got the mining, which increases the mining, the digital scarcity, right? Reduces the mining rewards. Every 210,000 blocks, Bitcoin rewards go by half. That rounds up to approximately every 4 years, which aligns very interesting with the stock market presidential cycle.
Yeah.
Right. Very well. So there is a lot of reason to guess and to forecast that the next 2 years, we are talking about a very powerful adoption, very powerful growth, appreciation of the price and cryptos. If it's gonna be 2x, 5x, no one knows. However, based on the facts, again, halving historically has always brought powerful rallies, and ever since the halving time, like this one is April 2024, we always saw massive rallies. Exactly this chart. Very well. Thank you, Tony. Right? The halving, after the first halving, the price rallied 90x, 9,000%. Second halving brought 30x, 3,000%. Right? In May 2020, right after COVID, we got the third halving and it brought 700% to the consecutive peak. Right? So even though there is this diminishing return over the years, right? The volatility shrinks, it seems, as the market capitalization grows. Still, it is a positive tendency. We've always seen, those are the facts, we've always seen massive rallies and the prices never came back to the same halving prices. So everybody who bought at the halving, they were in profit. And for most of the time, they were in very heavy profit. So that itself may speak on some investment opportunity, for many, based on the facts, not opinions. So that aligns again with the positive 2024 overall expectations, with abnormally positive set up from the stock market model, and Bitcoin is getting more and more strongly correlated to the stock market, which is, like I say, why we need to observe the stock market model as well. And all I know is I want to be out of the market before 2026, which is the next midterm bear market.
Oh, sure. Yeah. So Adrian, not financial advice. You don't have a crystal ball, but what do you think the all-time high might be? Maybe a range.
Oh man, you're teasing me. Oh man.
We won't hold you to it.
That's okay. That's okay. I made a lot of mistakes, a lot of missed shots. What I'm thinking is, again, if I were to guess, so instead of the all-time highs, I would probably go for, again, this pattern of the halvings, right? And that translates to, again, like 9,000%, 3,000%, 700%. I wouldn't be much surprised if we see somewhere between 3 and 5x from the halving price. All right. If it is 30,000, so be it. If it is 70,000, so be it. Right. So the best part about Bitcoin and the best part about investment in Bitcoin is that it likes to surprise everybody. Right. It tends to rally so much better beyond what anybody expects to the upside, and also fall beyond anybody's expectation to the downside. All right, that's what it does because of the power and strength of the trends that tend to persist. And they are additionally backed and driven by those our biases. When we feel overconfident, we overinvest, we put in too much money, we get, put too much leverage, we get wiped out. We boost our egos when we predicted something right. even though we were uncertain as hell at the moment of predicting, we feel that we predicted and nailed this prediction, right? That it was obvious. Well, in fact, those are our biases. Those are our illusions in our mind that make us feel better, and that's just it, right? So, speaking again of the facts, I would so much more prefer to rely on this halving cycle than just make my, all other guesses. And even if we take, like I said, 3-5x from the halving prices, um, I'd say there might be a chance we see Bitcoin worth 150 to $100,000. Who knows? I'll be very happy. I don't know where it takes me. The trends have no target, so it may continue fatter, it may continue higher. God
Sure.
knows.
Yeah, I will definitely be happy with those price points as well. Are you trading any altcoins like Ethereum or Cardano or XRP, anything like that?
Correct. So most of my portfolio is about 50% is for the buy and hold, right? So I'm not really planning. I'm not trading it actively. I'm not planning to sell it in the next 2 years, probably before 2026, like I said, quarter 1 or quarter 4, of 2025. So I hold Ethereum, although I'm quite underexposed to Ethereum, I guess. Maybe I only have about 7-10% of my portfolio of my crypto assets, if you will, uh, dedicated to Ethereum. And again, there's a reason behind this because I commit to the strength, to the relative strength. I so much more prefer to dedicate more portfolio attribution to something that rallies very hard and continues to outperform, and I make money rather than stalling on Ethereum that's been flat for most of the time when Bitcoin rallied 180%. Right? So most of the money is right now in Bitcoin. I have some other altcoins, although they are mainly like leftovers of some forgotten coins from the last markets, from the last cycle. There are some side investments, that I do have for the senior investments. I fund some of the projects at times. I commit to them. Some of the projects are very, very valuable for what they are right now, and the combination of gaming, Web3, AI is definitely not the one to be ignored. So I do invest in some of those early bird opportunities, if you will, right? That I help as an advisor. Some of the projects really uh, are afraid of making the mistakes they made the last cycle because they didn't have reliable people around them, right? Because people, again, this is sad, harsh truth, but most of the crypto influencers are scammers, right? They're not reliable. They do things illegally. They don't, they have no qualifications whatsoever. They give financial advice, even though they have no license to do it, right? And that's a reality. And when they finally find someone, who's licensed, who's accredited, who's reliable, who's been in the years for this industry for years, that may be worth tens of millions of dollars of earned opportunities, of not missed opportunities. So I do help some of those projects. Each and every single project is transparently disclosed on my Twitter account every time we release a new partnership announcement and so on, because transparency is key, right? As a CMT, as a charter market technician, I need to disclose them even more so that I want, right? So not only I want to disclose this, I really actually need to oblige under the CFA regulations. So that helps maintain the transparency as well, which is very important and very much missing. So some of them are early investments. Like there's a cool project named GameSwift. Again, I'm invested in that, so take it with a grain of salt, your own research and so on. I'm invested in the early stage right there. They are very powerful Web3 gaming, modular blockchain. Good thing, shout out to the founders. Um, Very, very good people. There is a very good tokenized hedge fund, for instance. I'm also equity holder there. So feel free to take it with a grain of salt. Nomad Fulcrum, right? RWA is tokenization of the RWA's real world assets, another big gigantic trend. So things like that, like the GameSwift, like Nomad Fulcrum, those happen to be actually those deep investment for me that are alternative to Bitcoin, that are vested over the years. So there's not much immediate kind of like power or control over what I what I have when I am with this project. Still, there are opportunities, right? And like I said, I made a lot of mistakes. Got some things right. Most of the time, I make mistakes. So take everything with a grain of salt.
Adrian, great insights. I got some wrap-up questions here for you. First is if you could create
Yes.
your own metaverse, what would the theme be?
Oh man, that's a good question, Tony. On metaverse. So see, I'm skewed by the Bored Apes, right? I'm a Bored Ape holder. So I'm a little bit skewed. I think they're planning something cool. If I were to to mm, to focus probably on my own thing, it would be education, right? It would be putting the Bird Nest as this educational platform, licensed educational platform for traders to come to the metaverse and doing like this proper education, quality, reliable education, with the actual titles, accreditation, filtered information, facts, not opinions, which is missing in the space. So that would be probably like a virtual school, trade school, in the metaverse. We're such an excellent team that we have over the years, at the Bourbonness. They're incredible professionals, so much smarter than I could ever be. I learned from them so much. So getting them every single one of them wrapped, as the as leaders, as the mentors, in such a metaverse school could be a good idea. Yeah.
And I got some rapid fire questions for you. Favorite food?
Oh man, those are the most difficult ones. Hold on. I really love carbonara, like the Italian carbonara pasta.
Favorite musician or band?
Oh, that's also tricky. It's either gonna be Frank Sinatra or Joe Bonamassa, two different genres. So let's place two.
Yoda Bonamassa. I mean, yeah. Um,
Love
favorite
it.
movie?
Favorite movie? I think Wolf of Wall Street is awesome by Scorsese and Leonardo DiCaprio.
Favorite book?
Favorite what?
Favorite book?
Book. Sorry. It's literally. I think it's gonna be by Daniel Kahneman. It's gonna be Noise that made me realize how much I disagree with myself, how much noise there is within me. What that explains so many of the irrational behaviors. Helps make money, helps more accurate choices in life. So Daniel Kahneman and Noise.
I gotta check that one out. And when you're not trading, what are you doing for fun as a hobby?
Great question, Tony. So I'm an amateur musician. Right now, I'm heading to actually rehearse with my men's choir and in Poland, which is something that I do. Otherwise, I travel a lot, although it's most of the time business and work, so there's not too much leisure. Um, music, I think is the next passion.
Oh, that's awesome. Adrian, pleasure chatting with you. Appreciate the insights. And like I said, I appreciate your content. I follow you. So always great stuff. Thank you so much.
Thank you, Tony. And I wanted to give you a quick shout out because I admire your work. Everything that you do is so always very passionate. It's so full of smile. And we need more people like you in this space. So if you find a way to clone yourself and make yourself 20 of you, right? For everybody to cheer up and give it a proper recognition, my man. Please call me when you find a way to do it. I wanna be part of that. And
Oh, Adrian, you froze there. Okay. But I think we got everything. Thank you.
that's okay. Thank you so much, Tony. You're awesome.